So we do monitor the near-term forward spread. You're right, and that's been our preferred measure. We think it, just empirically, it dominates the ones that people tend to look at, which is 2s, 10s, and things like that. So it's not inverted, and also you have to look at why things, why the rate curve is doing what it's doing. It can be doing that because it expects cuts or because it expects inflation to come down. In this case, if you're in a situation where the markets are pricing in significant declines in inflation, that's going to affect the forward curve. So yes, we monitor it. You're right, and that's what I would say.
Bitcoin lost its gains, falling after the recent Federal Reserve's conference and the Chairman Jerome Powell press conference. The Bitcoin price was sitting about the $20,000 around about, down 1% over the past 24 hours. So before we continue the video, as usual, I'm going to appeal that please subscribe my Bitcoin thinking channels. Sorry, I was again forget that. Bitcoin thinking channels and turning on the red notifications button.
That's right. It does appear that institutions are moving in. They're taking this price decline from nearly 70,000 to roughly 20,000 as an opportunity to move into a new asset class. And in 2018, Cambridge Associates, which is a consultant for the institutional space, basically said to its clients, okay, you may not like this thing called Bitcoin. It may sound like a Ponzi scheme to you, but it's acting like a new asset class. And that got their antenna up, because what institutional investment managers cannot miss is a new asset class that will diversify the portfolio, meaning lower the correlation of the returns. And Bitcoin is doing that. And we think other crypto assets.
And your team's holding on to the $1 million forecast?
Oh yes, more than $1 million.
Above $1 million?
Yes.
By 2030?
2030. And in order to see the building blocks, you'll see we're not making crazy assumptions. The building blocks are in Big Ideas 2022 at arc-invest.com.
ARK Investment Management, Kathy Wood, spoke to the Bloomberg's and was talking about the Elon Musk, Twitter's, Fed policies, interest rate hikes, and was talking about particularly Bitcoins. Bitcoins opened 77% of the cryptocurrencies were lower Thursday, falling alongside stocks in the wake of the latest Federal Reserve decisions on the monetary policy. Key economic data due Friday could be a catalyst for another significant move. The price of Bitcoin has declined 1% over the past 24 hours to below $20,300, having plunged below $20,200 immediately after the Fed Chairman Jerome Powell reiterated a hawkish stance from the central banks on the Wednesday. The largest crypto looks well able to slip below the key $20,000 level in the back into the $19,000 to the $20,000 range in which it has stagnated for much the September in the October. Bitcoin fell 1.4% to around $20,000 since when the United States stock market opened, according to the CoinDesk data. All these stock indexes posted greater losses, with the Dow Jones Industrial Average ending down 500 points or 1.6% on the Wednesday. The S&P 500 dropped 2.5% and the Nasdaq Composite tanks 3.4%. Most recently, billionaires Michael Novogratz, Galaxy Digital Holding is reportedly exploring eliminating 20% of its workforce. Bloomberg reported that after crypto companies such as the Coinbase, Genesis, NYDIG and the Crypto.com cut their head counts earlier this year. A major force driving cryptocurrency price down is the United States Central Bank's hawkish actions to the rein in inflation amid higher inflation and the microeconomic headwinds. It's expected that the Federal Reserve will raise interest rates at its next meeting. One another question rises are, does the FOMC meeting affect the Bitcoin prices? However, the effect of after the FOMC announcements on the Bitcoin prices are negligible. A possible reason is that the stock can only be traded during the opening hours, but Bitcoin can be traded for 24 hours. Thus, the effect of the FOMC is expected to be mostly reflected on on that day. The Federal Reserve is set to raise interest rates at November 1 to meeting after the hiking rates 5 times already this year. The nation's central bank is expected to lift the benchmark's Fed funds rate over 75% points, according to the CME Fed Watch tool, though a small minority expects rates to rise just half of a percent point. It's likely not the last increase for the years either. The odds are high that the Fed will raise rate as its December meeting as it attempts to get inflation, which hit 8.2% in the September compared to years ago. Higher rates have already been playing out on stocks, cryptocurrency, commodities, as well as many investments in the 2022. But what can be investors expected from her, and how long will the rising rate environment impact markets? The refusal of the crypto market to dump following another high interest rate hike points to the more strength in the market. This has seen the digital asset for much needed support at $20,000. Historically, once Bitcoin has its bottom, it deviates from the established trend such as the high market volatility following and fomc meeting. This code points towards a bottom for the digital asset. Another explanation for this could be the forecast that the Fed will finally start racing up on its stance to the tackle inflation. Despite inflation rate sales remaining above 8%, the interest rate hikes are expected to reach a natural end in the next few months. Once this reduction in interest rate begins, this will be the move into Bitcoin, which could be a signal that the bottom is close. If it has not already been reached, expectations of the Bitcoin will not go below its current cycle of $17,000. How many? $17,000. The $1.7 trillion in saving will allow households to spend in a way that keeps demand strong despite soaring rates, which could be a continued feeding inflation and push the Fed to raise rates even further. The European Central Bank hiked its base interest rate by 75 basis points for the second consecutive times, bringing its deposit rates to the highest levels in over a decade. The ECB hopes the aggressive rate hike will be able to curb inflation in the Eurozone, which reached at all-time high in October at 10.7%. How many? 10.7%. Europe's fourth largest economy, Germany, Italy, France, and Spain all deliver painful upside surprises. Inflation in the Germany reached 11.6% last month, the highest it has been in the over 70 years. Italy 12.8% inflation makes it a leader in the Eurozone, with France and Spain toiling behind with the 7.1% and the 7.3% respectively. While some countries in the Eurozone managed to post unexpected GDP growth in the past month and avoid an immediate recession, the danger is far from over. Rising interest rates in the US has been increasing the strength of the US dollar and weakening both the euro and the British pound, with the Fed expected to increase the interest rate by 75 basis points. Europe's two largest currencies could continue declining even further. Esther George, the president of the Federal Reserve Banks of the Kansas City, believes that the rate hikes could continue well into next year. She believes that Jerome Powell, the chairman of the Federal Reserve, could indicate that the nominal rate may need to be to the higher than the 4.6% project for the next spring. The high rates might be the necessary to curb inflation that could increase even further as households tap into their cash savings. George noted that the tapping into saving will allow the households to spend in the way that keeps demand strong despite soaring rates, a move that could continue feeding the rising inflation. The majority of that loss was taken by the top and the bottom income quartile, meaning that the richest and the poorest were the ones who saw their saving wiped out by the rising rate. The second and the third income quartiles, representing the upper and the lower middle class, keep their saving most intact since 2021. Who can expect the fight between the solvency and the rising rates to continue well into 2023? That's it for today. If you haven't already, subscribe to the Bitcoin Thinking channel and turning on the right notifications button so you'll never miss any for future fascinating and interesting videos like that one. So see you next time.